Good day, fellow investors. In the recent video we discussed, there were many comments. Okay, Sven, what to do now? You have discussed how the current financial environment is weak, fragile. So what should we as investors do? What does that mean for us? Should we switch to gold or something else? And I'll also give you the answer as we go through the video. Okay, what is your conclusion? All in gold, all in cash? What is the instruction for action? And I'll give you that too. And there were many comments that we can discuss. Sitting on the sideline might be risky because you never know what can happen to the dollars you are having on the sideline. So what happens if MMT dies? How to protect yourself? And gold and silver are also discussion, but maybe for another video. What we'll touch on today are a Ponzi scheme that the government is running, a dollar that is losing value day by day, and the answer is owning value assets, and you'll also see what I own. So let's start with the Ponzi scheme. The definition is very simple: an investment fraud that pays existing investors with funds collected from new investors. So if we look at the federal finances, this is what they have to pay to investors investing in the government's debt. How are they paying for that? Well, they are borrowing more to pay for that. From new investors, they are just paying the interest on the other debt that has been already collected. So when the new investors get that, the scheme collapses, and we have discussed how things usually go bankrupt, first gradually, where we are now, and then suddenly. Of course, the government cannot go bankrupt because it can print its own money, so the Federal Reserve balance sheet is there to print money, and they went from 700, 800 billion to the current 7 trillion. That's just a 10x in not even, let's say, 20 years. But the consequence of that is the following. With $1 110 years ago, you could buy 30 Hershey chocolate bars, 1944 20 bottles of Coca-Cola, and now you can buy one McDonald's coffee, and maybe McDonald's is even losing money on that $1 coffee. But that is how the currency is created, for it to constantly lose value to ease the debt payments and the debt burdens. And you can also see the depreciation of the dollar if you compare it to the Swiss franc. $1 was 4.2 Swiss francs 55 years ago. Now $1 is 0.84 Swiss francs. So constantly and steadily losing value. There are these ups and downs, but they are losing value. And if you look at the finances in general, all this borrowing leads to increased federal net debt. Here it was 30% of GDP, and it has just been skyrocketing to current levels and even higher estimations, and they will just borrow more and more. If interest rates go higher, then things get even worse. But something to be understood here is also the government spending multiplier, because a $1 increase in real government spending increases real GDP by about 0.5. So the 2 trillion that the government is borrowing increases GDP by 1 trillion per year. So we need to take 1 trillion out of all these years to compensate for the government spending, which means that without the government increasing its debt, there wouldn't even be gross domestic product growth in developed countries. Without the spending, without the debt, there would be no growth, which would make things look uglier than they already are. So the only solution is, as always, inflation, more money printing, and kicking the can down the road as long as it goes. And the key question now is how to invest in that environment. And the answer is pretty simple. You need to own producing assets that don't depend on how much money is printed, but their value depends in the services they create, in the value they create, in the commodities those mine, in the food those businesses produce, etc., etc. Those are producing assets, and the best is to buy those at the right price. Now, when it comes to the S&P 500, this is a great asset. It is the best businesses in the world, no question about it. But at the current moment in time, people know that the Fed is printing and therefore they are all seeking protection. However, you are paying, if you look at the dividend yield, the most expensive price for owning those great businesses in history. The only similar time was the 2000 dot-com bubble. So when it comes to investing, it's hard, okay, just buy this, but it's key to understand that investing in this environment is a process of building a robust, perhaps even anti-fragile portfolio over time. And what does this mean? Of course, value investing is the answer, but this process is something that you have to figure out for yourself and see, okay, whatever actions you're doing now over the next years, that you come out robust so that whatever happens you're okay, or even anti-fragile, so when if this financial scheme collapses, that you are even better. That is one way of investing, and I'm going to even give you the action, what I'm doing. So this is my research platform. You have everything there, what I do, value investing focus, my portfolios. And if you want actionable things, this is my course curriculum, the research platform. There is a lot on it. There are years of work there, so don't get confused there. The top of the research platform has everything. And here you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 24 deeply covered stocks, and you can check them, you can analyze them, and from those there are 4 strong buys and 9 good buys, and then you can do the analysis yourself, or you can join my platform and read for yourself. So for those who want instruction for action, I hope I have given you what I think. You have the stocks, you have my portfolios there, you can see how it works, you can check my research platform. I think you'll get the value of the money there. There is a 21-day money-back guarantee, so feel free to do that, and that's the best I think I can give you. Value investments, 15 of them, portfolios, strategies, and then you can see how it fits you over the long term. Thanks for watching. I'll see you in the next video.